Hello traders, welcome back to my channel. Today I will be explaining a short setup that I took on NQ yesterday, 17th of August. I shall go like usual through how I decided the bias for the day, how I marked my key liquidity point, and also all the way down to the 1 minute time frame for the short entry. So today I will be explaining also two setups, and to be honest with you, I've only taken one of them, one during the London session, and the second setup happened during the New York session. But as the first trade ended up in a win, which I have made about 2.5R, I decided to stop trading for the day. Because I was more happy enough to have gained that 2.5 R. But I shall be explaining also the second setup, because it also matched, ticked all of the boxes for an entry to be taken. So let's start. So first of all, I'm on the 4-hour time frame. And while I'm on the 4-hour time frame, I will decide the bias for the day. So as you can see here, we have I have marked and named this low 4-hour major low, and this price went below that low. I've decided that my bias will be bearish. I will be taking only short setup from now on. So after the bias is set, I have marked my 4-hour, as you can see here, from the left to the right here, as one of my key liquidity points. What I mean by that is because when price goes above that 4-hour key liquidity point that I have marked, I will be switching down to the 1 minute time frame, and I shall wait for the usual setup that I keep explaining in every video. It's always the same, to provide me with my usual short entry. If you want to know why I have marked that for our key liquidity point, of course, because here, where I have marked with this circle, there is liquidity, like also here. There is also liquidity. So let's delete this line here in the circle also. So when I have marked this for our liquidity point, when I turned on the computer and opened the charts, the price was nearly to go above the liquidity that I have marked. So let's drop down to the 1 minute time frame. So I will be explaining this very easy setup that I have taken. So this is the 4-hour that I have marked, and when I turned on the charts, price was around this point here. So of course, when I saw that, I was like then waiting for price to tick all the boxes for me to take the short setup in the London session. So as I always say, you need to have patience, because when price goes above the 4-hour, it takes some time for it to form our short setup. But some days it doesn't take that much, like this one here, for the setup to form. So as you can see here, price went above. So now the only thing that I will be waiting is for price to make a bearish movement. If price makes a bearish movement and also makes a break of structure to the downside, like it did here, which I will name break of structure, that is a signal that price might be going downwards. So the first box was ticked. Now, after seeing this break of structure here, I will be plotting the fib. And remember, I am still plotting the fib for people that are seeing my videos for the first time, so they know what I'm talking about. Once your eyes get used to know the location of the 61.8 of the fib and above, you will not need to plot always the fib, but it is more easier. So I've plotted the fib from the top of the bearish movement to the bottom, and now I will be marking only liquidity above the 61.8 of the fib, which there is only one point here, which is this one here. I shall name it liquidity. So once price goes above that liquidity, there are only two entries one could take. You can take an entry like I did on the first bearish candle creation, or else here there is an IFVG and you could have taken a short entry when this IFVG gets filled. But as I said, I took the entry on the first bearish candle that formed, which was this one here. So let's delete the arrow. The short entry was this one here. The stop loss was the top of the bearish movement, and I took the 2.5 R profit here. So as you can see, this price action was really fast acting because it didn't take a lot of time to form, and also it was a very simple setup. Price went above the 4 hour, made a bearish movement. The break of structure confirmed us that bearish movement might be coming. Then I have marked the 61.8 on the fib. I plotted the fib, waited for price to go above the 61.8, and also marked liquidity from that bearish movement. And after price went above that movement, I took the entry with the first bearish candle created. And so like that I have made 2.5 R. So let's delete it because this one is done. Also, if you had if you were looking like me for this kind of setup, you can note here that price went, let's mark it again, liquidity. Price went above this liquidity we have marked. Again, it filled this IFVG, so this was still a good short to take, but eventually you would have been stopped out right here, because if you were looking to make the 2.5 R, I mean, you would have been stopped out because this was only 1.11 R. But if you had a little bit more of patience, you could have marked this one here, because once price goes above the 61.8 and then takes another high, and there is a clear IFVG, the short could have still been taken, like this one here. Price swept this point here, there was a clean fair value gap, which then got filled and turned into an IFVG. You could have taken also this trade setup here, thus making around 2 R. It depends on one's preference of risk to reward. I prefer to always close it around 2.5 R, because if you had kept this trade, you would have ended up with a loss. But if you took the same setup that I had explained, you would have made that 2.5 R. So this setup was the one that made me 2.5 R, and then I have closed everything. I didn't trade for the day because with one win I'm more than enough happy for the day, but I shall be explaining the other setup that occurred later on during the New York session. So as you can see here in this price action here, price, as I said earlier, went above the 4 hour. Then it started to make this bearish movement here. So after seeing that bearish movement done, you could have plotted the fib again. Once you see this retracement movement like this, you can plot the fib because price is starting to retrace. So after that movement, you can see here, we will mark liquidity like usual above the 61.8, which I will be marking this one here and name it liquidity. And as price goes above that liquidity point, you will just need to wait for the last IFVG to get filled to take the short. What I mean, you see this price action here, two bearish candles and then the bullish candles. The last IFVG, which is the fair value gap that turned into an IFVG, this one here, once price fills and goes below that IFVG, the short is good to be taken. So that was the second setup, which I didn't take but still ticked all the boxes. You just need to wait and let price show you what we'll do in the future. Don't try to go prior it, just wait. So the short entry could be taken from here, and the stop loss could be set for around not this point here but the one above, and then you could have closed for take profit. You could have closed like for the low here of the movement. It was still good. You could have made around 2.10 R, or else if it was me, I would have closed at around 2.5 R, which was around here. So, and as you can see, price kept going downwards and even more low, I think, but you would have made around 3.8 R. So that's all for today's video. I will just do a quick recap. So first of all, you need to decide the bias for the day, and the bias for the day, as I have said earlier, was bearish, so I will be taking only shorts. Then you need to mark the higher time frame key liquidity point, which in this case was the 4 hour. Once price goes above the 4 hour, you just need to wait for a bearish movement which does a break of structure. If it doesn't, it's still countable. Then after that bearish movement, you need to plot the fib, mark liquidity above the 61.8 of the fib, and once price retraces and goes above that liquidity, you will just need to wait for a bearish candle, or else a fair value gap which turns into an IFVG, gets filled, and you take the entry short. As you have seen in this video here, the two setups, it were the same. It were just the same. So I think that's all for today's video. I hope that you enjoy and liked it and learned something from it. And if so, please leave a like, subscribe, and a comment. Thank you for watching, and I'll see you on the next one.